I started this Twitch on this. I started the stream on Twitch, and I'm not quite ready yet. I was gonna start it at 2:30, but um, where did that? Sorry, I'm just resetting one of the templates. I did that template yesterday on Crude, and of course it's gone. I'm like, how do these things just like disappear? I'll never understand that. And why? Like, why does that always happen to me? Anyway, I'll give you guys a second to join, and then we'll get started. But some way, somehow, I'm missing these mid intervals. Like, where do they go? Oh, I see. Okay, hold on. Someone might have to give me those ranges that we had yesterday on CL because they're somehow gone. Anyway, let's get started. Well, the first thing I wanted to look at was oil, but we can look at Apple too. This was mostly off that cleared break with the 66. I think it was 66.24, so I think this is right, being that first major target that we looked at, right? So crude definitely had some weakness after stalling here into the open, but like I said, I feel like this is more of a Friday type trade, so we can still kind of monitor oil into the close. I'm watching XOM closely here too. I did wait for a bit of a pullback to try the longs on those. We don't have the full, because my gold chart member kept deleting. Where did I put it then? Oh, hold on. Not here. I'll have to look back at that. We'll cover Apple really quick for Vinci, and then we can come back and look at this. Now, this is kind of interesting too, because this is an older chart that I had on Apple, but clearly it's holding off that prior range that we were looking at, close to like 242, 243, 244. So I'm not sure exactly where we had that fib, but do you want this, Vinci? Because this is, I'll have to go back and double check where I got it from, but clearly this would be probably super accurate in terms of just using a retracement. Let me just apply these ranges on here just to see where, maybe they're stalling like close to like 1.25. Okay, that would make sense. And let me just delete these in between. Yeah, I don't remember exactly where we captured these from because this one's a bit of an older chart, but I do think that this was off like that structure break on the yearly, I just want to see if we adjust this just slightly. So you can see like the range where it stalled here last time, okay, is pretty similar to where, I don't know if you can see that. Do you see that? Like where it's trying to hold. So this likely needs back over that 271, 247 area, but oh yeah, you guys might have to resub if you're using like the Prime subs, because I haven't been streaming as much. But the only issue that I've noticed with Apple, Vincy, is you can't really see it on like a 1 month, but on a 2 month it looks pretty good, like for an odd to come back in reverse, especially. So this is a really bearish pattern on the 2 month for Apple, but the way that I'm looking at this is if this can come back and retrace by end of this month, so since this runs until end of February, then your odds of this negating and engulfing increase. Does that make sense? So you see how it protected that 25% ratio? Like, you know how I usually use that 25 to 33% protection? You can usually get extension. So what that means is, like, if they come back and they break above here, then you could extend that 25%. Okay? So, and my thoughts would be if they can close likely over maybe that 75% ratio into earnings, then they have pretty decent odds of extending over like 300, 304, retesting those highs. They have earnings too after the bell, so I feel like that has pretty good odds. The 3 month is kind of similar. This obviously runs until end of April. My only concern was on some of the wider frames, like the 4 month, it is stuck in an inside bar, okay? And this runs until April. So not that they can't break out of this, obviously, and engulf on that 1 month or 2 month, but I feel like into earnings, they definitely have to test like that 277, 271. Otherwise, there's a slight probability where it could stay stuck beneath like 290. Does that make sense? So it's kind of like a sticky quarter for Apple, but a lot of these structures that look like this, all this really tells me is this is probably flagging on a much wider time frame. Just the way that it went to like an inside kind of range. Do you see that? Like, look at the 6 month. So that's my only concern with Apple, is that if they don't break range immediately, which would mean like this earnings season, I guess, it could stay stuck in an inside range until probably minimum May, but maybe as long as like July, unless they like extend break range, but then that could put you at risk of forming an even bigger star-like flag or something like that. You can see it. So 6 month, 7 month, 4 month, 8 month, 9 month, these are all stuck inside. Sorry, not the 8 month or 9 months. So 4, 6, 7, and 8 are all stuck in an inside range. Okay, so that would be my only concern with Apple, is just that. And I like that the 271 alignment with this previous fib that we had aligns with the same sort of retracement if they bring this back. Okay, so if they were to retrace this back up, then it would be the same thing as this holding that 50% range and them breaking back over here. The 2 month really is the cleaner chart though that I liked, just because it does a good job of showing this little structural hold right here, and it's very, very clear that the overhead is around that 272 to 277. Well, if they're gonna break, Vincy, it would probably have to be within this range, right? Like, it would have to be within this time frame, because it is month end, so, and they have earnings, so there's a catalyst. And that's why I was saying if ES can get back to the zone, and like you see the confluence here around like that 290.33 in these areas here, like if ES can get back to the zone, then it increases the likelihood of Apple getting these retracements. So I think at a minimum, Apple probably needs back over that 261 mark. I didn't really go back and check its structure, but oh, maybe 260. So maybe we'll watch these areas into the close here. ES, on the other hand, if you guys were trading this, like I had mentioned with ES, this was a very structured hold right here. Did you guys understand what I was mentioning earlier? So this morning, overnight conditions, we said that we really needed to try getting back to the 70.25, 70.29 area. I don't know why 29 is not marked. We put these in as part of our conditions yesterday with odds of getting over the zone. If they clear the zone overnight, that would increase the likelihood of basically these structure breaks. You can see that they stalled during London session here, like around 2:30, 3 o'clock, came back tested. It's not that we had a bad open and close, like 70.16, 70.21. Those were not bad. They weren't the greatest though. Above 70.22 would have been the best case scenario, right? So we didn't get any opening ranges near 70.22, 70.25. So it did reduce our odds of, especially if they don't clear this overnight. And that's what could increase likelihood of like coming back, revisiting core ranges, aka 69, 71, 69, 78. This morning was very straightforward. I said that they had to break 70.22 immediately, otherwise this could increase risk. That was a very strong failure. Like this was almost to the penny where it stalled. So it was an immediate short off open. First major spot that we were looking at was the 6971 area, which, let me just clear this up so it's easier to see. You can see that when they stalled 2.2, it's almost immediate that they took it to 7172, okay, like this area here. And you can see where there was strong continuation was right off that 7172 spot. Do you guys see that? This is really important that you guys understand price action too, not just in terms of like the actual price levels it's triggering. So this would be like a core to core break, okay? And when we looked at this yesterday, in case you guys forgot, like I did a tiny mock for you guys yesterday in terms of like open, close, highs, lows, and the kind of range that we could anticipate. And we did say that based on these types of open, close, highs, lows, okay, there's some odds that they could basically take this back I think we said it was like 33 points beneath, right? And based on the price action that we see around the zone area, so let's go back. You can see back in here, like they didn't even really try. Like they retraced it a tiny bit. Do you guys see this right here? I don't know if you guys can see that. And if you measure off like the 2.2, can you see that? I need you guys just to pay attention. Just pay attention and that's it, okay? Then you can go back and rewatch this, okay? So 722, do you see this? This was a pretty strong, so they did take it above here, but they never really closed above or broke above that 33, 34 point range. This right here is what confirmed the short continuation. Does that make sense? Like, they could have negated this right off the open if they wanted to. They could have held 7.3 and taken it back up and then came back and retested these areas, okay? So I'm just trying to show you guys what could have played out because this is important too. So this is where the short was confirmed. That's why I was saying earlier, if they don't hold off 7.1, that's why back here when they were started testing 7.1, I'm like, they need to retrace immediately. If they don't retrace this area immediately, then this is where we could see that short continuation beneath 7.1, and that would take us back to 69.40, 69.44, 47, basically back into the channel. And that mainly is because of like I said, where they open, where they close, the kind of extensions we could get beneath here. And you can see they tried holding off these areas here. Do you guys see it? I need you guys to try understanding like these ranges, like and how they continue. So they tried holding, but there wasn't really any strong push or sustainment. They would have needed at least back to 7.1 here for this to have had at least like somewhat of a like sustainment, retracement. This is where it kind of started to get a bit sticky. And the easiest way that I looked at this morning when I was monitoring was that 6902.75 spot is extremely calculated. Same with 6906. But when we looked at it from a mid-range risk, so, okay, this is how I knew that there's a chance they could hold. This is why I started covering some of the short around here, but also taking a bit of a long. I knew I could be a little bit early and it could go lower, but it was a good hedge. Why? Why was this a good hedge? And I'm going to just copy paste in case you guys forgot, because if they didn't hold this area here, that's what could keep that risk alive, okay? And we wanted to see if they would try to hold and then push. And it's because, and what they ended up doing is that same thing that they did was this offset. So they offset the risk, and we said so far so good. They avoided 6892. They held 7-point range. That was the offset, which we'll get to in a second. And now they have to try coming back to 6958, 6672, because that's what they failed to do earlier. They failed to get back over 6672, and it just kind of resets everything. So clearly the big overhead now this afternoon is going to be that 6988, 6989, which makes total sense because that's also the zone. And getting there is what gives you odds of getting that 7022 retest. Okay, that part you should understand. Like, I feel like that's very straightforward based on like where they stalled this morning, where they failed. But when we're looking at this from an actual calculated range, so let's go back. From a calculated perspective, that's why they're stalling 7172, like 7266 right here. Okay, this is a really calculated spot for market. Same with this 3-8 area here that we talked about earlier. 6938 is the same thing as if you were to subtract that 34-point range. We talked about this yesterday. These are all correlated to one another, okay? So the main reason why these areas were so important isn't just because of that being like weekly open, weekly lows. It's also because of the range breaks off the highs. So we're working with those 346-point ratios, right? So 173 points is what could take us back to like the 70, 71, these ranges in here, right? We already hit 7.9 this week. Okay, so there's a bit of a buffer in between here. That's kind of like that 7.5 to 9-point buffer. And then from our 6525, this would be like our 346-point range. So same thing. This is half of that, okay? So the way that I looked at this morning, and try to understand this, just try to listen, guys, more than anything, because I don't know if you guys quite understand how to get like a mid-calculated range. I feel like you guys really struggle with that. So the reason I thought that they could maybe avoid testing 6879, okay, and going lower, because we could have afforded to go a little bit lower, but it's not in our best interest to go to 71, 69, 68, whatever. It would have been in our better interest to maybe try holding that bear neutral zone, so like above 6898 to 6914, basically get back in that range in there. But then you'd have to have very strong progressive price action there. Do you guys understand like midpoint range or not really? So you should have a pretty good idea why these areas are calculated, but understanding midpoint range I think is the more crucial part. And especially in terms of like how these are correlated to like the 6911, 6914, and that means that they have to hold back over these 50% ratios. Okay, so this is where I took the hedge, and then I added more around like that 6902, 6906. Because triggering 6906, 6911 is what can re-trigger weekly lows, correct? Are you guys with me? And because we were using those 132 to 135 point ratios this week, I figured, okay, there has to be some sort of confluence around like 6907, okay? but there's also confluence around 6870 because of that half that range. Like 173 subtract the highs is exactly 6870. So that's not a coincidence, which is also our 346 point range is off 6525. Okay, so we already know the alignment there. Oftentimes when you trigger both sides, okay, this is what I was trying to explain. I'm just going to copy paste it, but oftentimes when you trigger both sides, and this happens a lot, okay, so we met our upside and we technically already met our downside. We don't really want to go lower if we want to get back into the zone, okay? So that's why I was saying this could be a huge spot here and a major area of confliction, because whether or not they want to hold off like this bear zone, okay, which is like 6888 to 6898, is going to be relative if they want to hold those midpoint ranges. Does that make sense? So your median basically of like 6870 and 6924, 6928, 6932, those core ranges, right? Or like the median points between 6914, 6906, right? Like your midpoint in between those areas is going to be right where they held in here. So today, for instance, if they held 6898, we had decided that this midpoint range was that 7-point differential. Same sort of idea, because I said if they're going to hold 6900, 6902, they have to get back immediately over 6911, 6924, 6928. When they did that, they retraced right back to 6935. That was that 7-point offset. And I noticed that that was that midpoint in between. So basically, let's say 6871, okay? And let's say 6906. The median of that would be 6888. So that would have given us an odd of maybe getting down to the zone, right? But if you look at it from the downside, so 6870, 6871, and where we want to try retracing upside, so a minimum of like 6924, the midpoint of that would be like 6897.50. Do you understand what I'm saying? Based on where they actually took it to, so what they actually did off these areas here, especially during this time here. Do you see that? These areas here and like these retracements. Look at this bullish price action here. Okay, that's not a coincidence. Like this is the exact kind of PA that you'd want to see if you're coming back off that mid-range. This is how I knew that they're going to probably hold lows. So weekly lows was what? 6879, I think, on the week. 6879. Yeah, 6879. So if you're looking at it at 6879, and let's say 93, 6932 or something like that. Okay, or 6879, and you're 6914, 16. Those neutral ranges. That's going to get you back to 6896, 6898, 6899. So in theory, like the way that you can think of this is they basically wanted to hold above the bear zone. Does that make sense? And they wanted to break out of a neutral stance. Like they wanted to get back above this area here when you're comparing the mid-range between 6879 and those areas. Like the median of that is going to be close to like 6898, 6899, 6901, which if we're using our zone theory, that's basically a hold of the bear zone, correct? Because the bear zone ends at 6899.98, and the neutral zone starts at 6899 to, let's say, 6914.15. That's the neutral zone, right? And we opened neutral today too, so there was some pretty strong odds that we opened at 70.15, which could neutralize us down here. Does that make sense to you guys or no? I need you guys to make sure that you're understanding this, because if you're not, then that's an issue. So if your zone areas usually start here, so if we go 6 6888 to 6932. Okay. And let's add, I think that's good. Hold on. It's just opposite. I have them inverted. Okay. And where they opened this morning. Okay, do you see the common correlation here? This is just a more dumbed down way of looking at it, not using any math. They basically stall the bull zone. Do you see it? They stall 70.21. Bulls fail to take control. This is a really easy way of looking at this. Okay, they open neutral. So like they open slightly above this 14 area, but right at 15. That's like a bull neutral area. Okay, they then take it down to this, the very top of the bear zone. 689998. Okay, I usually call this area playing with fire, which is kind of like what they did back here when they started failing. So they basically took it to a bull neutral open, taking it all the way back down to a bear neutral zone. So it still kind of neutralizes things on both ends because we opened in a neutral state, they held in a neutral state. Does that make sense? That's why I figured based on today's open, are you guys with me? Based on today's open and yesterday's close, they were more likely to hold a mid-range instead of taking it all the way down to 8.8. This is the hard part of trading. This is where you have to actually use your brain, okay, and use logic. So based on where they opened, okay, and where they closed, and what we achieved on the week, which was our 3.8, 4.2, 4.3, whatever, we had higher odds of holding a mid-range, okay, instead of actually achieving full range down to here. Does that make sense? Yeah, it's like a logical way of thinking of it because, and also due to the fact that breaking beneath here could really increase risk. Plus, it's not like they fully failed the 8.8, 8.9. You have to also look at price action. They still tested 2.1 up here, but like failed to clear. Okay, they still tested 8.8, 8.9 here. Like these are the only area that really had like, I would say very bearish continued action was on the failure of 7.1 and the failure to get back over like 5.8. Okay, this area here is where like price action was pretty bearish. So I already knew that the big major areas of confluence are going to be around relative to how strong they act around 69.22, 69.11. These areas needed strong liquidity, okay, in here and really good structure, which we got. So this confirmed that we would at least get the retest of 5.8, 6.6, 7.1, but in order to do so, they have to sweep the channel. Okay, sweeping the channel would be above 3.3 and that 4.9 area. So this channel sweep, and ideally before 12:30, because we wanted to clear this before mid-session. They did a great job of doing that. So had they not done this part right here, this channel sweep right here, this was the sweep of the channel, we probably would have still been stuck in this zone. Does that make sense? So, or like maybe stuck in the channel. They then took it back up to 6.7, 6.8. So that was like a failure of the 7.1 retracement. Brought it back down, but you can see here they did a really good job of holding the channel again, and they did a good job of holding 3.7, 3.8. These areas were also calculated this morning too when we looked at this because they were directly correlated to the weekly open. Pay attention here, okay? Weekly, that 6937 area was really calculated. I shared this morning, okay? Because this area is that 33, I mentioned this yesterday. This was the calculated range. Do you see it? Off the weekly open. Weekly open was around 6904. Okay? So this 33, 34 point range is around this 3.7 spot. It's kind of hard to like tag the exact area. But this holding here implied that they don't want to revisit 6904, 6902. Does that make sense? And instead, you'll probably see it now stuck within that same range. Okay, do you see it? Those 33, 34 point ranges we talked about yesterday. Do you see how it's stuck? I need you guys to understand why I'm picking these numbers. They're not just random numbers, okay? This is a pretty big area. This is the area that is going to confirm major structural breaks. And we already knew that earlier. We knew that if 7-1 failed, we would go down to 40, 38, 69.21, 24 could get retested, 69.06, okay? And now they're just stuck here. So I figured relative to what they do by 3 p.m., so now, this is going to help us determine if they have enough momentum to not only bring it back to the zone, but we have an odd of technically taking it back where? This is where you guys come in and start giving me answers. Where do we have an odd of taking this back to? Yeah, isn't it? What's even cooler though too is that the fact that like this range right here, remember how I said that they're kind of staying just beneath those 128, 132 point ranges? Like this overnight range right here, like if you're looking, guys, like I hate how this magnet does this sometimes. Do you see that? Do you guys see the range? Like this is insane. So this is definitely not a coincidence. They're like basically right within our 132 point ranges from highs to lows. That was another reason why they could have held those mid ranges. Okay. Yeah, they have pretty decent odds of getting back to the, not just the zone, but like maybe getting back to like this neutral state or something into the close. And a lot of it's going to be like if we do another 32, 33, 34 points from here, it would take it back to like 70.04, 70.06, which is same thing. It's like a neutralized range. And if we look at this off where we actually opened today, which was that 70.15, I think, right? Somewhere around there. And where they're kind of stalling here. Remember how we're working with that 42.5 point ratio this week a lot? It's another really cool way of looking at this. So I figured if they can clear that 42 to 44 point range, okay. Are you guys with me still? Off the real-time highs, okay, then they have a decent chance of getting back into this range in here, and that's that 69.77, which I'm 99% sure that was the weekly higher low, was it not? Yeah, it was. That was the higher low on Wednesday. So there's confluence from this morning's real-time open and this morning's real-time highs. Do you see that? Isn't that insane? That's exactly the 44 point range. And I'm not saying that they can't get it back there, but could become a little bit tricky. This is why you see this little area right here. Okay. Does that make sense to you guys? I need to make sure that this makes sense. Pay attention to this. You see this little area right here? How it's kind of like a little bit above that? That's probably closer to that 42 point range, because remember how I said the market's moving more closely within like 42 point intervals, but like let's just go with 44.25, okay, off lows. Do you see this? This area in here. Okay, let's just like highlight this box. This is where the market's a bit conflicted. Okay, so this kind of area here off lows, and this area here off highs. Do you see it? It's probably the exact same range. So let's take a look. It's close to like 4.5 to 5.5 points. Basically, this is, do you see that? Market's not going to have any major structural breaks until it finally clears above this 7.2 to 7.7 range. Okay, that's where it would offset this. And then by doing so, what do you have an odd of doing? Don't get this wrong. What do you have an odd of doing if that happens, if that's the case? So this would be off the actual, let's measure off the actual overnight highs. Let's just measure off here. Do you see how that's also like right in line with the zone? Off overnight highs, if we measure our 42.5 point ratio, which we know is extremely calculated, do you see how that's also in line with the zone? Do you think any of that's a coincidence? It's definitely not. So this is a major overhead. Not clearing this area can essentially mean that you can come back down to here. Clearing this area means that you have some odds of getting, you know, maybe retesting this range here, getting back into the zone. But what else could that 4.5 to 5 point ratio do for us? Think about it. What else could that 4.5 to 5 point ratio do for us in real time? And this is actually really cool because if it did do something like that, do you see it? Well, no, if they clear it, it could actually break range. That's what could break our 70-21 failure. Okay, that could break that 123 point range and increase it to 128, 132. Does that make sense? That would be the offset. It would give you those odds of getting back to 70-22 retest, 70-28, 70-32. So far 59 was definitely a reduction stick, so this hasn't been really helpful, and it's actually insane that it's very close to that range of like that 5.5 points. Okay, because that's what we need to clear here. Do you see it? If they had broke that up. So this could have easily taken out that range in here and given us that retest. So we already are well aware that 69.72 to 77 is the big overhead area this afternoon, and clearing here could give us an odd of getting back to 8.8 and maybe getting back to these zones. So I just wanted to cover that for you guys, because remember how I said they could just neutralize us now into the close and into earnings? I would have preferred that they took us to the zone, but even keeping us at core areas is probably fine, because keeping us at core areas into the close could also mean what? Exactly what Booth just said. Can you still go back to core retest here if you close that core? The white box, guys, is core. Anything above 6.6 and beneath 8.5 is a core area. You can, right? You don't necessarily have to get back into the zone. That would just give you a better idea of how price could react. Like if Apple put earnings out and ES was in the bear zone, then that could be negative, right? If it was neutral, it could be up and down. If it was in the green, it could be positive. So, but what I'm saying is them keeping it above 6.6, like near the 7.2, 7.8, 8.1, whatever, this could still give that push into the close, okay? It could still be a core-to-core move, which in theory is just our 128 to 132 point range break, right? Does that make sense? I'm tired of talking now. But the most important takeaway here today isn't more about where we go into the close. Like it is, like I know 69.72, I mentioned it like first thing when we held, but it's actually more important that you understand, okay, why they held those lows, okay? Why they held a mid-range low. That is more important, I think, because trying to time your low is a lot harder. Do you guys agree? Like trying to figure out that these could be the lows, especially if we had risk down to here and it's the second last day of the week and we still hadn't tested our weekly lows. This was the harder decision here. And that was based on where we opened, where we closed, the highs that we hit, the mid-range, and overall range, okay? So a few scenarios to close off the week. If they're somehow successful in getting this back in the zone and retesting 70.22, 70.32, I would say odds are still open for the 70-43 retest, with 70-52 to 58 being the most calculated ranges to achieve. I saw some of you guys did the homework, but not all of you. But those were the right answers. Like the 52-58. I think those are probably the most calculated areas for us on the week, if they have enough strength to bring it back. And I think Apple earnings could do that if it's strong enough. So let's see here. You can usually give it the first 15 minutes post 3 o'clock too. We can watch to see if they retest that 7-2 spot. I'm just going to put an alert at 69.75, since that's kind of like above 7.2 but beneath 7.7. CL, we said we're going to watch to see if we can get some structure breaks. XLE has been kind of lagging though, but could just watch to see if they can try getting it back over half its range. So around that 51.15 mark, which I think is pretty close to where they opened. Yeah, it is. They opened at 51.17. So if XLE can get back to OR, basically, after the bell. Gold had the reversal right back to our 51.20, 51.31 area. That's an extremely calculated spot. Honestly, that's not a bad area to try some longs here. This was like a perfect hold, okay? And I don't have all my gold levels because you guys remember how that got deleted yesterday, but we can go back and let me check actually if was I able to go back and save it? No. Remember how this kept coming up and I said I wasn't going to close it? Maybe, I don't remember what template it went on after I accidentally closed it. I think it's gone. That's sad. Unless... No, we left it on there and I never closed it, but see, it's still not coming up. I don't know where it went. I thought I left it open. I did leave it open because I didn't want to close it and then lose it. But it's somehow disappeared. Again. Is this it? This is not it. This is one of my older ones, but that's unfortunate. That was my core template. Oh, I don't know where it went. Oh well. We can reanalyze it anyway, but probably have to get, these are probably aligned to like the open close here. It was this template, but I don't know why it just disappeared. And then I left it open yesterday, but then it wouldn't let me reopen it again for some reason. And then I saved a bunch of these templates, but it just keeps loading the GC chart instead of the gold chart. And the gold chart, when I reload it, goes back to here. It's kind of strange. It was after I did that 2-screen thing, remember? I wonder if we try pulling it up on here again, if it'll... No, I think it's gone now. Because I closed it out yesterday. It's definitely gone. It was the one that I had SLV pulled up on, which I thought I left open last night. before. I'd even shut down my computer either. I left it on. Because even silver is gone on here. Do you see that? And this is my core ES template. So maybe... Yeah, see? My silver template's gone too. All those that we marked on here yesterday are gone. That's so annoying. Like, where's our 121 spots? And then 120 and 116, all of that's deleted. That's so annoying. This one keeps taking over for some reason. And these are all different templates too. Like, this is template gold 1. And they all just reset. I don't know why. It's so weird. Market makers don't want us to know exact price, guys. And that silver chart was perfect. At least I have pictures in the Discord, but so we can go back and reset it. But the issue is I want to have it exactly the same. You know what I mean? As what we had it previously. I don't want it to just be random. I guess it's okay because we could just easily use the same ranges, but it's still kind of annoying that that happened. Because we used 44 to 48 point ranges, right? Yeah, and then only use those so they don't get deleted. Well, I know that these were in line with like the 94 to 96 ratios, but though I feel like the levels I had before were a lot more accurate, which is kind of annoying. And like we know that the 71 to like 74 area was the clearance spot. Same with 83. At least I have them memorized, but it is still annoying because now I'm going to have to reset all of this. Okay, like these should align here, which it does. This should align to like that 102, 103, which it does. They're not going to be the exact levels, unfortunately, this time, but whatever. We'll have rough estimates. It won't be perfect like the original, sadly. Oh yeah, see? Like, look, this is insane. Are you guys looking at this? What's this level here? So off last year's highs, 80, that 83, 75 spot should be linked to this area here, basically. I don't remember what the exact 121 spot was that we had marked, but it's somewhere up here, which is pretty close to where we stalled. And then when we looked at it off those 44 to 47, 48 point intervals, I think that's how we captured, isn't that how we captured the, like, I don't know if you guys can see that. Isn't that how we captured the full range? These ones here should be closely linked to like the 116 area. It wasn't 115 though, it was closer to 116, so I feel like that's a bit off. I think it was the measurement from highs to lows. Yeah, closer to this. This is a little bit more accurate. And that 83 area is what we use to basically measure, like this 82, 83. Okay, is the bigger clearance spot, and that was used to measure that 44 to 46 point range right here. Do you guys see it? Are you guys listening? Like this, okay? That's why that area was important. So if you want to write notes, you can, since my chart unfortunately got deleted, but these are the bigger clearance spots off that exhaustion stick from 1980. Okay, like this here is what's linked with this area here. Hence that's that big overhead clearance, whatever you want to call it. And then basically this was the 46 point extension, which is why there's a lot of overhead around the 129, 130. And right now where they're stalling, or where they stalled, is basically 37 points above there, which was that exhaustion stick. So in order for this to expand, it has to break the exhaustion range. Does that make sense to you guys? Let me just put some notes here so that you guys can understand why that 121 is important. So in order for silver to expand, it needs to clear the 37 to 38 point prior exhaustion range from 1980, which would imply a 44 to 46, 48 point move, which equates to, I'm going to just start leaving notes like this since this is so complicated, 129 to 132. And then we figured the bigger expansion on this is like to the 162 to 168, 170. That's on the bigger break above the 121. Okay, everyone's on the same page. We're obviously missing some important levels in here, but that's okay. I can go back and check my old template, but I already knew that 121 was huge, so. We didn't really look at the midpoints though between like our one, like here. Like these clearance spots here. You guys watching? Look. Okay, and then when they cleared. Do you see that? Off this clearance stick. I don't know if you guys can see that. This here. That's basically this low holding off this clearance. These structures, open, close, okay, are off the 66. This here. Because these were also calculated spots. The 71, 72 area is basically linked with the yearly open. Okay. You guys listening? Like the 116, the 118. These are linked with yearly open. So if you want to leave some notes there for those spots, then you can. Linked to yearly open and December highs close for 2025. Just so that you understand where those ranges come from. If you implement it though with the 37 point intervals, which would be, where did that go? These here. I know it's kind of hard to see. That's how these areas, are you guys looking? That's how these areas right here. Okay, it's kind of, I know it's kind of hard to see because of the overlap, but these are, do you see that? The December 31st low is aligned with this low. So them breaching that slightly today, that's a little bit concerning. Okay, so because we're basically trying to avoid heading back all the way down to here, which is like that clearance spot, and that area is linked to here. So the 106 spot is basically linked to those lows, this 106, 107 area. Okay, so how price reacted there is also very important. And then from the opening range for the year, which is right around here, okay, you can see that, to the high range to start the year is linked back to here and here. So I would say at a minimum you want to close above that 113, 114, but ideally the goal is going to be to obviously get back over that 121. But in order to do so, there's probably going to be a lot of overhead in between here. And then the closing opening structures, like the final or highest open close. Are you guys listening? The highest open and close for 2025. And maybe it'll help you guys if you write these down. So the highest open and close for 2025. So December 29th or whatever it was. I don't remember the exact date. 30th. Is linked to this 116, 117 area. Okay? So this low is linked to the low in the closing candle. So that's not a coincidence. So do you understand what today's candle is doing? Today's candle is insane. Today's candle in silver basically tested the area of expansion, okay, and stalled a major area of exhaustion, that 37, 38 point range around that 121. It did break it just slightly. So if you pay attention here, and then it also is retesting the lows from the December 31st lows, okay? And it's also trying to close or get back to the December 31st highest open, highest close. Isn't that insane? And when you're measuring from highs, you can see it's linked to the highs. So something I noticed here just by a quick glance, what do you guys notice? This is very, 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 very cool. Look. Do you see the differential beneath and the differential above? It breached below, but it also broke above. This is offsetting. It's trying to offset this risk. Look at that. That is insane. How much did it offset on the upside? Above this area. That looks pretty close to being the same. And these are not even exact ratios because I didn't mark it exact, but isn't that crazy? That's nuts. I swear the market is so calculated. That is insane. So even though it went a little bit below, this thing broke a little bit above. That could be to offset some of the risk. So where this thing closes today is going to be vital in terms of seeing if we get a continuation, okay? So these are huge areas. And unfortunately, I lost a lot of my levels, but there's definitely some spots around that 106, 107. The 110 I had a fib, but now I don't know where that fib came from. So that's long gone because I have no idea where that 110 fib came from. But it was a super accurate fib, and it was exactly where they held here yesterday. So I have to go back and figure out where that came from because I did have a fib right here, and it was exactly where they held. So, but at least we can understand the highs, lows to open and close. So the most calculated area to close is going to be around here, hopefully, if they can get it back over there. And I know I didn't mark the 114, but that 114 area is important too. And that's why yesterday's close was also very calculated. You see how they took it right back in this range in here? So long story short, if they're able to get it back over here, they should be able to try retesting that 121, which would give us an odd of getting that 128, 129, 132. What? In Alberta? What is this? The Trump administration has held covert meetings with separatists in Alberta. My province wants to separate from Canada? What? Why? A community trading view so we can keep tabs on what we're all trading. Yeah, but how do we do that? Before in the past, we used to make threads. We used to make threads in the past for each ticker. Some of them are probably still alive. There's a Tesla thread, there's an Apple thread, there's an ES thread. There's so many threads, but I feel like I can't do all of it at once. Like someone else is going to have to help me manage that stuff. Yesterday, I asked someone to make a thread and no one did it. I said if someone could make a thread for silver and gold, it'd be easier to keep track of. But if you want to do it on TradingView, we can do that too. It's just I personally am not very familiar with that. I don't really use TradingView like that. Like I've never really used TradingView for group chats or something like that, or I don't know. If you guys want to, we can, but I know I would probably forget, like if I'm being honest with you. Because you have to remember too, I'm using Twitch, Twitter, Substack, Discord, emails. It's overwhelming. I can't use that many different platforms. And then I use my own brokerages, which are entirely different. So I don't really want to use another area dedicated for something. I think keeping it within Discord would be the easiest, but thanks, Snack. We did used to have a channel dedicated to just charts, like in the previous Discord, like with charting, but I feel like Threads is the easiest way to do it, because then if someone posts something like this, for instance, okay, I can create a thread and call it Silver, and then everyone can, you know, share their thoughts on Silver in here. I feel like that's the easiest way to do it. Or you can start one on gold. We already have a whole bunch. Pretty easy. Like if you click on your thing, booth, you should be able to click those 3 dots and then you can create a thread. And I'm pretty sure I gave you guys all access to create threads in here. If I didn't, I can change it. Okay, try now. I think the permission is there now. I think I used to have it there in the trade floor. That's why. So I don't think I had it in here for Substack. I don't know. We could try that. If you want to do the trading view route, we could do that too. But if you guys want another room in here that's just charts and then you can create threads in there, then that's fine. If you're okay with it just looking like this on the left-hand side where it says Substack and then the different names or charts or whatever, then that's also okay. But just don't create like 1,000 threads, guys. try to keep it somewhat under, like, you know, like 25, 30 or something like that. Just like the common ones or something, okay? Or if you guys have an idea or something that you want to share. But I feel like threads is better because creating channels is just annoying, because threads, they can disappear, you can archive them, like, whereas channels, you'd have to just delete the entire thing. Even gold is back at those areas that we looked at yesterday. Unfortunately, they're also gone off my chart, but I'm gonna find that template. I know it's somewhere. I just don't know where it disappeared to, which is really unfortunate because I don't want to restart it and then have it disappear. So but we were working in these intervals. And we are also working with those 313 point ranges, I think we said. Resetting an entire gold chart seems very annoying. I really don't want to have to do that. I'll work on that tonight. These are not exact ranges, by the way, but I obviously don't have my template anymore, which I worked on for so long, but it's okay. I think these are going to be pretty, yeah, these are pretty close. I don't remember exactly how we had that 3,500. I have to go back and redo this because they're not exact, but this was the clearance break. So I think what we did was we measured off of that actual range, which was like that 3601 or something like that. This is just so that we have, I just need something to work with because I can't not have anything here. And off the actual clearance area, which I think is close to here. Yeah, but my other one was 100% accurate. It was exactly to the exact penny. Way before gold even ever hit these spots. It was the exact range, but that's okay. I'll survive. The only thing I wanted to like remember though is, remember how we looked at like that 300 point interval or something the other day? Do you guys remember what it was? Like, I know these are like the six, you see this? Like the six, where is it? You see like that 665 area? This is that, like I know that for a fact. Like this here is likely the exact kind of range that they had back here on these breaks. So like what, 665-ish? Do you see that? Like, it's not exact, but it's pretty close. Like this off of this and these clearance breaks to here. It's like almost perfect. Do you see it? This right here. But how did we come up with that 300 point interval? That's what I wanted to like go back and look at. I don't remember if it was like off the December or January ranges and the differential between here or here, but it was like 315 or 320 or something like that. And it was a really good offset. Where did we capture it from though? Was it this, the differential between here and here? We looked at this yesterday. I think it was the difference between this clearance break and here. I don't remember exactly. It was around 300 something points. But if someone can go back and look for that too, that was a really important aspect that I found on gold. And I feel like it's kind of linked to these areas here. Yeah, it is. Like this area in here. And these areas here. then that is linked to these open close ranges in here. Offer 588. These are linked to the yearly open, yearly close from back in here. And then off of here, I think these areas here are what's linked to these spots that we're looking at right now. Like these are the bigger ranges in here on gold off of here. And that's why they're that 50. It was that 55.10 to 14 area yesterday, remember? Like this spot in here. I don't know if you guys can see that. That's why these areas are quite calculated. It's not going to be perfect like the original, but I'll at least try going back and updating this. That's pretty accurate though, that's pretty close. Yeah, oh wow, do you guys see that? Okay, so like look at open and close against these recent highs and lows. So it is around that 300-ish point ratio. Do you see that? So there's a bit of an offset here. So maybe of these open closing ranges, like it has to close at least around that 5,500 spot. And these are what's linked to that 5,700 area that we talked about. Because we said that there's going to be the highest amount of confluence around 57 to 5,900 and 6,105, right? So I'll update this as I go tomorrow. Like, it's not going to be the best, but this is still pretty good. I just don't remember why I think 5,600 never had that much confluence, okay? I think that's the issue here. The confluence was closer to the 5,700, so, but my only concern is that with silver, it hit that 121, so there has to have been something linked to that, but I'm just wondering if, because there isn't that much confluence around there, if maybe that's the reasoning behind, you know, like them stalling that area. I wanted to see, like, overall range was 1603, because I'm pretty sure we haven't hit anywhere close to that yet. No, we haven't. And I don't remember if on the 10-month... Oh, you know what? Actually, maybe that's what it is. Okay, these areas were off those 10-month ranges, like those. Remember how we said 53, 75, 76, 56? Those were really, really big spots on gold. Those were off those 10-month ranges. So I wonder... No, those would still be linked to this 5,700. So 5,700s have more confluence, 57 and 58 and 59. But maybe if you guys can see this here, let me just clear it real quick. They could also be stalling though. I wonder if it's because, do you guys see this? Like from, like that's why I think this area has a little bit more confluence. But I wonder if it's because of this. Hold on. Like this is probably why they're bringing it back to this point in price. But I wonder if it's off the, like the midpoints. Do you see what I'm saying? Like closer to here. Maybe that's why. Kind of like a mid-range price point or something like that. Like 1305. Does that make sense? Like usually when you go back to like a mid-range, this is where price can be conflicted. So it doesn't really give like super strong conviction, but like 1305, if you guys want to write down this level, would be 56. What was that? So 56, like 23. That would be off a 10-month. That could be maybe part of the reason why they stall there. But I'm going to stick with the 5700 area having a lot more confluence than the 56. So let's just mark this 56, 23, 10-month mid-range. And that's what can cause that volatility back and forth. So this needs back over this 4,000, 13, 15 area. That's where this bear flag kind of started. And then going back to ES, ES is testing that 69.79 into the close, just like we wanted. And that's, I knew that this would be a really strong overhead into the close, and they'd basically just be stuck within the core ratios between 6.7, 6.8, 7.2, 7.9, 7.7, 8.1, 8.3. How many here think that they're going to enter the zone here before the close? So I feel like if they're going to try retesting 6.9, 8.7, 8.8, they probably have to start pushing 8.1, 8.2 no later than probably 3.55. Considering we have earnings, like I said, it's not a big deal if they keep it stuck at core areas. That's okay. I would be more concerned if they took it to the zone but like stalled the bear zone area. That is what I think could put Apple at risk, okay? Does that make sense? Oh, this is an older template on Apple, actually. We can watch this here. We said Apple needs back over 260, right? Let's do a poll. ES into close. Core bound, so 6971, 6978, 6985. Zone entry, 6988, 6992. Neutral break, 6998 to 69, oh, or 7,000, sorry. 7,000, 7,000. Core retraces. I feel like core retraces is going to be super hard. That's basically 67.20s. I think that they would, or 70.20s. I feel like they'd save that for after the bell. Neutral. They'd have to really push here if they want that to be the case. Apple has to push 260. Retrace. Neutral. Range 70.06. to 70, 12, 70, 14, whatever. Okay, I put a poll up, guys, if you guys can vote on that. Do you guys see how they're trying to push this here? I bought tomorrow's expiration for the long today just in case this is more of an after-hour move. Off that 69.0206. I did want to see if crude had any sort of strength into the close too. So far it's been pretty weak. Gold is kind of just right back at these calculated ranges that we were just looking at. These were really big spots that we looked at yesterday, so I'm just going to mark them because I already remember these being really important areas yesterday. Honestly, this doesn't look too bad before 350. Gold needs to push this 53.79 to get back to 5,414 to 5,420. ES needs to try getting back over, I would say, at least 8.2. Ideally, you want to see ES try breaking that 8.8 to 8.9 area into the close, because that's what's linked with 2.2, just in case you guys forgot. How many of you guys forgot that already? Hopefully not. Okay, these areas are linked back to here, off the highs. Okay, if they can get back over here, that means that they have an odd of getting back over 2.2. Okay? Just in case you guys forgot. I feel like someone might have forgotten that this area is extremely calculated. And that's our zone spot too. So, and getting back above here is what could maybe give us those odds of getting those bigger retests. So like the 9.3, 9.4 break would give us odds of like 28. Okay? The 9.8 break would give us odds of 3.2 break. Does that make sense? And that's basically a 100-point move from lows. So just let that like be the circumstances or conditions. Okay, so if you break 9.8, you can retest 3.2. If you break 8.9, you can retest 2.2. If you break 9.2, 9.3, you could retest 2.7, 2.6. Got it? And a lot of this is going to be relative if they can break this into the zone here. So let's see. Zone starts at 6,988. Did you guys vote? Only 5 people voted. Come on. I already told you guys what I think they're going to do earlier, but we'll have to see. 20 seconds left here. They did test 6,986, but no breaks. They tagged 6,988, which is a zone, but no entry yet. Like I said, I think it's okay as long as they test here at 350 and try getting into the zone no later than 354, 55. Okay? Apple had that overhead we set at 260.10, so we'll see if Apple can trigger that into the close. I think that was what we said would be enough to get a 271 to 279 retest, right? Gold also just cleared 5379. Do you see the confluence here? Gold clearing 5379 while ES is trying to clear 88 while Apple's trying to clear 59 to get to 60. And they'll probably all do it at the same time. That's how I know that our price points are accurate. They have to all be in line with each other. Meanwhile, crude is trying its best to sustain off these lows. That's pretty hilarious. There's some decent liquidity coming into Apple too, into the close. Let's set some alerts at 8.9. It's funny because XOM and CL are holding up pretty well, but kind of strange that XLE is kind of stuck. So you guys think ES will just stall zone entry into the close? Okay. That's not what I voted for. And we also already tested 8.8 at 350, so I personally think that we have some odds of getting back to a neutral zone into the close, or at the very least, like, retesting 9.8. Like, I feel like we have better odds to get back into here, but obviously it's going to be relative to what they do by 354, 355. And we started the week neutral. We held neutral. Okay, we opened neutral. If I'm just using my base theory in terms of like the zone. Is this helping you guys? You guys better have held the long into the close for a zone retest. Or at the very least a 7.2 to 7.9 retest. So we already know that 7.2, 7.9 was the heaviest area, and then followed by 8.8. So this played out to be very true. 6.9, 7.2 was heavy all afternoon. And then now they're trying their best to push 7.2, 8.8. Breaks of 8.8 is what could give us those odds of 69. 69.94, 69.98 with slight probabilities of getting back over 7K. That's only going to be probable if they can clear. I would say they'd have to clear 9.8. Probably no later than 356. Okay? That would obviously mean that you have to get this in the zone at 354. So now ES testing 6988 at 354. Apple struggling here a little bit off that 259 spot. So first condition met. There's going to be the most pressure, like I said, though. If we're going to get neutral ranges and not bear ranges, the most pressure is going to be at 355 and 356. So condition for 354 was just get into the zone. So that condition was met. 355, I would say it has to break that 8.9 and 9.2 area. There's the 8.9 break. Getting these structure breaks here means that you have those odds of 6.9, 2.2, or sorry, 6.9, what am I saying, 6.9, 70.22, 70.26 after the close. With slight odds of getting 70.32 retest if they're able to get back over 7K. It's not actually 7K, it's 6,998.50, but we'll just say 7K. There's the 9.2 test here at 55. I know I don't have the levels marked, but that's what the calculated spots are. It's 8.9. Okay, this area here. This 9.2. I think we had some overhead around like the 9.4. And then right around here. 355 conditions met, 6992 tested. Like I said, the most pressure is going to be around 5.4 entering the zone, 6.988, 8.9, 5.5 testing 9.89 and 9.2, and then 5.6 trying to push close to like 9.4 area here. This is what's going to give the highest odds. My vote was that we would get it as close as possible to 69.98 to the 70.0205 range. But I obviously could be wrong. Kind of surprised a lot of you guys voted only 8.8 and 9.2, but if they don't continue like right off 5.7, 5.8, then there's a chance that they could obviously stall 8.8 to 9.2. That means that they might limit us to the current highs that we had in real time today, okay? I think that you'd have to test the 9.475 before 359 for that to be a probability. These are the 33-point ranges off highs, overnight highs, real-time highs. We already broke above the real-time opening range too, so these are the exact ranges that we had just looked at prior to this. Where do you guys think they're going to pin the close? Give me a number. Apple hasn't taken out that 260 spot yet. Gold is hovering just beneath that 51.13.15. That's a super calculated area for gold. I voted 699875 to like 7K 701. I feel like it's very calculated off overnight highs, and it just kind of makes sense from like where they tested the lows and where they held, but also where they stalled like these ranges here, okay? Do you see it? So if they push here before 59, so at 58, which is what they're looks like they're doing right now, that's when we have the odd of retesting 70-35, 70-38, 70-42. Does that make sense? That's how we have odds of retesting the all-time highs, is if they can get it above, I would say, at least over 03. Okay? In order to have any odd of getting an all-time high retest after the bell here, I think they need to try getting over 70-07, 70-10. 6999 tested, guys, for the exact penny. That's pretty crazy. We'll see on the 30-second turnaround whether or not they can hold off 9.2, 9.4 and push it back. These are pinnable areas between 8.9, 9.2, 9.4, and 9.9. I thought that they could maybe cap range close to 9.9 and 7K. But like I said, the actual spot was closer to 6.99875. Okay? That's a very calculated spot for ES in terms of max range for real time today. That's insane. That was perfect. I don't really like that close though, but at least it's above 8.950. That still gives odds at that 70.22. What about Apple? Apple is conflicted. This could cause some volatility here into the close. Can you guys study this, please, so that you can understand why I voted for 6.998 as a max range for real time today? That's a pretty calculated spot off highs. So we do have some odds to retest those overnight highs, but I think they'd have to try clearing here pretty soon, because stalling a bear zone is pretty risky. And that's hilarious that they, remember how I was saying earlier that another reason they could do this is just to take it up 100 points? Isn't that insane that they actually did that? That's pretty wild. Look at that. That's insane. 100 points off lows, 33 points off overnight highs. Keeping it right in this bear zone, tagging right where that bear neutral zone starts, around 9.9, 9.8. Gold, on the other hand, is same thing. You see how it's kind of just stuck a little bit beneath? Everything is kind of stuck right beneath. So ES stuck beneath 9.9. Gold stuck beneath 54.10.13. Apple was stuck beneath 260. All of this is quite calculated. They kind of left it just a little bit beneath. Does that make sense? But because ES tagged 9.9, that could give the market some momentum to move here. I'm going to stick around, guys, for a little bit, but let me turn on the Benzinga news, and I'll make some coffee, and then I'll be right back if you guys want to listen to the earnings call here. I just forget how to do this sometimes. Hold on.
Adjusted earnings of $3.07, $3.17. The estimate was $3.14 for letter V. Revenue of $10.9 billion. The estimate was $10.692 billion for letter V, Visa.
He's just reporting Visa first. I'll be right back. I just want to use the washroom.
Visa shares right now trading just about flat. Letter V. CNBC reported Amazon could invest up to $50 billion in OpenAI in the coming weeks. That's AMZN. HIG Hartford reporting $4.06. The estimate was $3.22. That's a beat. Revenue of $7.34 billion. The estimate $7.294 billion for Hotel India Golf. Hartford.
I didn't even have to make a coffee. My sister got me a nice coffee. All right. Let's go back.
RHI, Robert Half, reported 32 cents. The estimate was 30 cents. That's a beat for Romeo Hotel India. Revenue 1.3 billion. The estimate was 1.396 billion for RHI. A&L, Aldi Nortai, resuming trade. Hit a high of $8.44. Alpha November Lima.
I feel like this is already leaning, not bearish,
SNDK SanDisk reporting $6.20. The estimate on SanDisk was $3.10. That may not compare for SNDK, Sandy November Delta Kilo. SanDisk shares hitting $594 at the highs on that apparent strong beat from the company. Up right now about $55. Approaching 600 now on SanDisk. SanDisk sees Q3 revenue of $4.4 billion to $4.8 billion. $604 now on SanDisk, SNDK. WDC, Western Digital reporting. WDC, Western Digital reported $2.13. The estimate was $1.92. That's a beat for Western Digital. Revenue $3.02 billion. The estimate was $2.92 billion. So that's a beat for WDC. Whiskey Delta Charlie. WHR, Whirlpool reported $7. The estimate on Whirlpool. Disregard Whirlpool. VERI, Veritone announcing major expansion of Veritone data refinery suppliers to monetize proprietary data. That's Victor Echo Romeo India, VERI. Coming up in 20 minutes at 4:30, earnings from Apple. HOOD, Robinhood. Bloomberg reported U.S. ways tapping Robinhood for Trump accounts for children. That's HOOD. DECK, Deckers shares spiking following their report. Deckers 115.66.
Everything's basically at a standstill.
Deckers raising their full-year guidance. Shares of Robinhood also popping here on that news from Bloomberg on their Trump account.
Hey Jordan, I'm good. Well, how are you doing? Haven't talked to you in a long time.
SEZL, Sezel, new CFO for the company, San Diego Zulu Lima. Coming up, Apple in about 15 minutes. BZH, Beezer Homes reporting. Loss of $1.13. The estimate was 47 cents. That may not compare. Revenue of 363 million on BZH. The estimate was 332 million. So that is a beat on revenue for Beezer, BZH. DXC Technology, 96 cents. The estimate was 83 cents for Delta X-Ray Charlie. Vor Biopharma announcing prospectus for resale of 13.9 million shares by selling shareholders. That's Victor Oscar Romeo, VOR.
So being in a bear zone and also being beneath that 260 mark on Apple, I would say is probably not the best in terms of odds, but considering we at least tagged 69.99 today on ES before market close, it could just they could definitely have some two-way volatility. I think they could test both sides of the trade. And tagging here implied that they could try bringing it back to that 70, 21, 27, 28, but not without taking out that 6999 overhead first. What happened there? It's just paused.
WDC, Western Digital shares about flat following their reports, and at WDC, Whiskey Delta Charlie Sandvik shares hit a high of $627.99. Now at $617. That's SNDK off the highs, following their extremely strong report and guidance. Micron shares spiked on that as well. Right now, up about $14 off the highs on Micron. Shares of NVIDIA also popping here slightly. NVDA.
Well, they're still holding 698788, so that's that's okay. Gold is still stuck beneath that 5413, sorry. I feel like Apple usually announces earnings around like 424, 425 between like this window here, so probably in the next few minutes. Yeah, but sometimes it starts moving a little bit before. Excuse me.
SNDK, SanDisk, and Kioxia extend Yokkaichi joint venture agreement through 2034. That's Sandy November Delta Kilo.
I'm going to turn this back on though, just because I want to see if ES triggers back beneath like 8.7.
AJG, Arthur J. Gallagher, 58 cents. The estimate was $2.35. That may not compare for Alpha Juliet Golf. All right, look at that. ES is breaching beneath 8788 just before release here. So like I said, I feel like that close in the bear zone could definitely imply some volatility, but because of the fact that they tag 99, it could be two directional volatility where they could take it down but still take it right back up. Apple is trying to hold off that 257 and retag back over 258.20. Like I was saying, I feel like Apple usually starts moving around like 424, 425. And we'll see if we get any major breaks on ES around these 5 minutes prior. Just because it's testing right at the zone. Apple coming up in 5 minutes, expecting $2.67 in earnings, $138.4 billion in revenue. That's coming up at 4:30 p.m. Eastern Time.
$258.20 is a big spot on Apple. If you don't have that area marked on your charts, you should. Same with this 257 spots. Basically, what this is doing is it's stalling just beneath this big area here, okay, and it's barely holding above this range in here, okay, because I feel like a break beneath 256 is what would trigger this volatility. Neutralizing it is basically between 258 and 259, so I don't really think that this area does much for us, but breaks beneath here is kind of what could trigger the downside. Same with ES. It's like any breaks beneath 8788 can obviously trigger the retest of core ranges, whereas breaks over 99 could give us those odds of breaking back over like 7008, 7010, 7021, 22.
Shares of Micron continuing to pull back now, 443.20, up about $7.50. SanDisk shares are off the highs, still up sharply.
I'm using gold as an inverse indication, guys, for ES and Apple.
Up about $65.
So note
Major
this.
airlines urge Congress to pay air traffic controllers if U.S. government shuts down. That in the statement
6987 breached
now.
while gold breaks 5,413. That's not a coincidence. So these are really aligned with each other. 5413, 15 break on gold ahead of earnings. I'm using these as kind of some inverse indications. So this could maybe imply some downside first prior to upside, but I guess we'll see what happens here. I feel like this kind of close though on both ES and Apple was, it leans bearish but still neutral based on where they tagged in terms of pre-market highs and right ahead of the close. This little tick right here gives it odds of both ends of the trade, and they're trying really hard to hold off 8788, just like Apple's trying to hold off this area that I drew right here near that 257.56. There's the structure break on gold just before 430. Remember, these are the range breaks on gold that could give this an odd to come back and retest those high ranges, with 5700s being a little bit more calculated than the 5600 area. I could stick around for like another 10 minutes, but I'm going to have to sign off here pretty soon. What do you guys think? You think they take it down first? Based on the way gold moved and the way that we closed, I feel like downside odds first had higher probability, but and the fact that gold broke 54 or 55, sorry. No, 54.13 to 55.
Anthropic and Defense Department are at odds over terms of up to $200 million contract. That from Wall Street Journal.
That's actually pretty crazy that they're stalling right at that calculated range right before 4:30.
Coming up, Apple momentarily.
And
Apple expecting $2.67 adjusted, $2.66 gap.
we were looking for these ranges up here on Apple, but where's that Apple chart that we just did? This one here? Yes, okay. I'm going to watch both of these here. Just because I put like some bear ranges on this.
Apple reporting $2.84. The estimate $2.66. That's a beat for Apple. Sales of $143.76 billion. The estimate $138.4 billion. So that's a beat for Apple. AAPL.
256 hold, guys. That's insane. They held
Greater
the exact
China
line.
revenue of $25.53 billion. America's revenue $58.53 billion. iPhone revenue $85.27 billion. Apple shares spiking here, $265.30 at the high. Again, Apple beating on earnings, $2.84 versus the $2.66 estimate, and revenue or sales $143.76 billion versus the $138.4 billion estimate for Apple.
Are you guys seeing that 256 hold? Breaks beneath this just ahead of 330 or 430 would have triggered that downside. This was
Apple
a really strong protective
sales
break
were
right
particularly strong in China.
That's actually insane. They neutralized it, but because it did go to this neutral range, that could still imply volatility. We have to see if they trigger that 271 spot that we talked about, because you see how like this area here, 258.20. Remember I said mark that spot on your charts? Mark it, 258.2019. That's a huge area on Apple.
Apple shares off the highs now, up about $6.
They opened it right
That's
at 258.15. That's insane. That caused that trigger to that 264.81. On this template, I'm looking more so for like that 267, but it's more this like 270. I can't really see that. This 271 area, I think it was. And mainly on the hold of 256. That's pretty crazy that they held exactly 256 and then broke right off 258.20. So we're looking for the 272.
Apple's CFO said during the December quarter, our record business performance and strong margins led to earnings growth of 19%, setting a new all-time earnings record.
This was the area I was looking for on breaks over that 258. I think they could get maybe more than 271. Eddie, like if we were looking at that previous range that we looked at, there was the odds that, I don't know if they can get all the way back to 288, just because remember how I said Apple's stuck in those inside bars? Do you guys remember that? Like on the 4 month, 6 month, 7 month, 8 month. That's the only reason why maybe it doesn't get the full structure break, and the only odd it had of getting the full structure break, like basically breaking 288, 290, was if it could take out 260 ahead of earnings, which it didn't do. So that's why I'm thinking they could maybe limit the range around here, like around that 271, 272 area, but we'll see. ES stayed pretty stagnant though. Like it did break, but you see how it hit that 7001, 7002. I was pretty spot on for these ranges on ES. It seemed like the bear neutral spots would probably have the highest odds, but where did our template go on this?
Apple's earnings call coming up at 5 p.m. Eastern time.
That's strange. Why does this stuff always happen?
BNAI, brand Engagement share is selling off sharply here now, hitting $10 at the lows, closed at 52.63.
You guys saw that, right? I didn't even change the ES chart. So where did it even go? Now the ES chart's gone. That's nice. Why does that keep happening? And this is not the template. Oh, this was my template. Now it's gone. I'm gonna have to reset this again. Why? Why does it keep doing that? Even this just like disappeared. I don't understand that. Maybe TradingView just gets like overwhelmed or something when there's earnings, or I don't know. Because I feel like that happens way too often. Where did they stall so far? 268. Okay, I have to sign off, you guys, but I had some odds for Apple close to this 271, 273 mark, with slight odds of extending close to 278,
NUWE,
279.
Nuwellis, enters into definitive agreement to acquire Rendiatech, advancing its cardiorenal portfolio strategy. That's November Uniform Whiskey Echo.
I'm just going to pause him for a sec. One reason that it could stall maybe slightly beneath is because of that slight reduction that they had before earnings. So what I mean by that is, you see when they closed off right here, like just ahead of the close, or like right into the 401, this little reduction here, they're not much, but just like these slight reductions here, are you guys listening? Could be partially why they might keep this just a little bit beneath those marks, but that was my max range for Apple. And when we're looking at this in terms of like where they actually closed, close to that 258 area, off here it's like roughly 2 points. So these tiny reductions in range could be the differential offsets to where they limit us on, because those conditions were mainly if that area were to, let's say, break. So kind of like when you're measuring off the highs versus, so maybe closer to here. Okay, closer to here. You can also look at like the overall range. Are you guys looking at this? In terms of like where they stalled, the area to clear, and then where the lows triggered. So this is just more so to ensure that that area is in fact the spot, which it does seem like it would be. Does that make sense, you guys? Based off the ideal highs, okay, which they never triggered, versus the actual lows, and then that 272.71. So 272.71 is extremely calculated off that 260 spot. Based on where they actually triggered and those lows, it's closer to like 360 and 383. So 360 is close to that. Okay, so that makes sense in terms of that first reduction that we looked at. Okay, and 283 or 383, sorry. Hopefully this helps you guys have an idea of why they would reduce range like that there. So that 269.11 is definitely a pretty big overhead, okay? And these are quite calculated off of these ranges here. What was that other range that we said right ahead of the bell? Was 360. Like 271.98. Yeah, so I would say that those areas are still calculated like the 271, 272. 273 spots, and it seemed like they reduced range based on triggering that 256 low, so 255.80, and failing to clear 260.10 before the bell. This was really calculated based on that 258.20 spot. Like my actual level was 258.20, but they couldn't quite clear that. They hit 258.15, and the range differential between that area there is 235. So this is where this range can come into play. Do you guys see that? Like these areas in between here, which is around that 270, 69, 72 spot that we were looking at. So big areas to clear are obviously going to have to be and this isn't just for today, I'm just talking in general for Apple, okay? So this area here is linked to this area in here, okay? Overall range, like total range in here, is linked to these areas in here. Hopefully this helps you guys have a better understanding. Vincy, I'll put this in the Discord for you because I know I think you swung Apple, right? So what you could do to understand your odds is maybe measure like your fib from those highs to lows now that we can confirm that those areas are in fact calculated, right? Or measure them off the areas that seem to have more odds. So like off that 270 spot against the 258, okay? So you'd need to get back at least over 264.37 from highs to lows. Or like this calculated range, you'd probably want to stay closer to, like if you're going to achieve 270.69, you'd want to stay above 263. Does that make sense? So just by glancing at this, you guys, these areas here, like between 268, 269, between 262, and then if we measure off where they actually stalled, so basically 262 to 264, could be, this area here could be a pinnable spot, okay? Because that's like basically trying to sustain half the range. And I would imagine that the downside is probably going to be the same. So if they extended downside, I would think that it's probably going to be close to like these areas down here, close to like 250, 251. And same thing with extending downside over here. I haven't really looked at the levels on Apple, but I would imagine there's probably some sort of support ranges in here for the week, especially off like the 258.20. Do you see that? Like, so that's actually pretty insane. So this area here, I think 258.20 is more calculated, so that's why I would measure off there personally instead of measuring off the exact lows. And if we do so, that would basically mean that there's a ton of support near the 253. This area here, okay? Let me just make these red so you guys know that this would be like downside. Okay, is that helpful for you guys? So this area is pinnable, this area is calculated for upside, this is a calculated area for downside. If they can keep it between 60, 61, 62, 64, it still gives them some odds of testing that 69, 70, 71, 72. The best area to keep this pinned at into the close, if they want like max odds, would be above that 6.4 area, okay? If it's linked to 5.8 and highs, then you'd want to pin above 6.5, 6.4. So basically above where this 430 high. That's actually insane. So the calculated spot is 265.64, which is actually right where they stall here, if you can see that. That's off max range from the top and off that 258.20. That's half the range, okay? So 265, 64 and higher would be the best for Apple's odds in terms of upside. 260 to 264 keeps it kind of neutralized. Anything beneath that 260, 261 area gives odds of retesting 255, 56 with calculated ranges close to like 251, 30, 252, 60, 253, 88, 254, 40. I think this should give you guys a fairly good idea on why they stalled here, the reductions in range, where they took this to. And it makes sense based on ES stalling these bear zones too, so I'm not really surprised to see that. I don't know what happened to my ES chart, somehow disappeared, so I'll just fix that tomorrow. But thanks guys for watching, and I'll see you guys tomorrow. I'll put out some overnight conditions. I think it's going to be pretty straightforward. We did say that we want ES to get back to the zone for Friday, so I'm assuming that this template's gone now, so I guess we can just redo it, but essentially it's just hovering right in the zone. So, and the reason I said that is to basically reset the conditions for month end, which means getting a better pin this time, because before we pinned in these neutral spots, 7011, 7014, 7004, they were really not terrible spots, but they weren't the best. 7009, 7014, 7010. So the goal is to try sustaining the zone on Friday, getting maybe a better pin, maybe closer to like 7022, 7028. We still have slight odds of retesting our calculated highs around that 7041, 43 area. 7043, 25 is calculated. Max range on upside this week, we said, was if they do come back and break 4-3, there is some tiny odds that they could get breaks to 5-1, 5-2, with a very calculated max range being closer to this 5-8, 5-9 spot. So if we somehow get a decent close today in the zone and avoid back testing 6-9, I would say that we'd probably have to avoid back testing beneath 69, 71, 72 overnight for that to happen, okay? So if they can sustain 697, 172 overnight, then we would have some decent odds of getting back over like 70, 22, 32 and maybe retesting those highs. Max range for the week, I would say, and I've already said it before, is I think already met. Like, it's, the market doesn't really owe us anything above 70.38, 70.42, so they can just recycle ranges here and make it a pinnable Friday. That being said, I would still watch oil tomorrow, because I think this kind of, it never really went fully down, but just kind of stagnant. I would still keep a closer eye on this, especially with CL tagging that 66 spot tomorrow. With gold closing above 5379 and tagging exactly at that 54.24 spot, we could maybe see some relief. Silver, I forgot to check into the close, but we did say it's around that 116, 117 mark. I have to go back and, where did our silver chart now go? I feel like there's no way that that also deleted after we did all that work on that silver chart. I would be so mad. Here it is. Could you imagine if this deleted? Let me save this. Hold on. I would have been so mad. Okay, so these areas here on silver are linked to the 2026 highs, or sorry, 2026 open and 2025 highs. So very pinnable spots between 115.35 and that 116, 117 area here on silver. Pinning around here gives you odds of retesting our 121 spot, which then gives us odds of 129 to 132. Okay, any questions before I sign off, or is everyone good to go? If you guys are okay, then I'm going to sign off. Most ideal area for ES to pin is obviously 6998 plus, but sustaining over 698788 is still fine. Well, Intel we already looked at yesterday, but didn't we say with this one it has to clear back over that 49 range? Otherwise, in between here, it's stuck. It's kind of like, it's the same offset on both sides where you have, like, this would be like an upside range. Okay. how many points is that? Like close to like 5.5, 6 points. Okay, same thing here. Do you see that? Okay, and this is off open, close, open, close. I don't know if you can see that. So at the very least, you'd want this. They're just kind of pinnable spots, like right in between here. It's stuck in an inside range. So far on like odds, bulls are a little bit more in control because they took a bit more upside than they did downside, but it's not going to get really any major clearance breaks until this starts heading back over that 49 spot. 49.10, I think, is the calculated spot on Intel, if I remember correctly. No, sorry, this 48.79 to 49.20 area. I would mark these on your chart. That's when they start having a little bit more control. Okay. I would also mark that 46.97. This is kind of the area over 50 where I'm just going to delete these fibs, but where it starts getting a little bit better in terms of odds. And Intel is, I don't have like that's not the primary chart on Intel. I'd have to go back and find it, but why don't you, Sports Luck, are you in the Discord? Are you in Discord? So why wouldn't you just go in Discord and go back and check Intel? Especially because we have so many calculated charts on Intel when we traded it the last time on that run, right? And the exact ranges on that clearance break. Like, you should just go back and vet those numbers because they won't really change. And they were quite perfect ranges between the 40, 42, 46, 50. And I'm pretty sure it was the fact that they could engulf it on the year or something like that. But try just going back and looking at it because it's not... I don't think it was that complicated. And I feel like the most simplified way of looking at that was it's basically stuck right now beneath this 3 bar. Okay, you can kind of see that. And you're not going to get any real progression until you start breaking past those yearly ranges again. So you see when it cleared right here, that was a perfect clearance break. So the fact that it's trying its best to hold over this 48 area is good, but it's not going to really progress until it starts getting back over that 49.89, 50 spot, okay? So, and it's already at an odd of doing so since it kind of held there, but maybe just go back and double check because I don't think that those areas were that far off. Like, I feel like just on a very base approach from a yearly chart, do you see it? Like, this is some pretty prime support, which it's clearly holding into 2026. Okay. And that can keep those odds in play for retesting those upside ranges. Okay. So 57, 59, 60. But if you want like the very micro spots, then just go back and check Discord because Intel's one of my most traded names. So I for sure have a ton of past references on that one that haven't changed. All right.